Hello traders, my name is Logan with Funny Talent, and in this video, what we're going to be doing is our market forecast for the week of September 6th. We really hope you guys enjoyed this video, and what it is going to pertain to is our technical setups that we're currently eyeing up for this upcoming week, and also fundamental drivers that we are keeping an eye on and maybe staying away from as well. So without any further delay, let's get right into the video. So traders, here we are in the slideshow, and without any further delay, let's get right into the fundamental drivers. So for this week, Monday, we have nothing. Tuesday, we start off the week at 12:30 a.m. EST for some Australian dollar news. Then we move into Wednesday for some 10 a.m. news on the Canadian dollar, 11 a.m. news on the Great British Pound, and then tentative CAD news for the BOC press conference. Then we move into Thursday, some more Euro news at 7:45 a.m., 8:30 a.m., and then Canadian dollar news at 12 p.m. Then follow up on Friday with some Canadian dollar and USD news at 8:30. So not too much news, definitely better than last week considering we had NFP. So hopefully there's nothing too much to interfere with your trading. Looking into other news for this week, the U.S. Nonfarm's payroll actual number was 235,000 as a forecast of 733. So the forecast was much higher than the actual number was. So almost a multiple of 3, which is just crazy to think about. Whoever did that forecast was just way off. This is significantly undershooting market expectations, obviously. Tech stocks have seen the biggest inflow of capital since March of 2021 and the largest outflows from the U.S. Treasury since February. So pretty interesting numbers overall leading into our risk sentiment. It is mixed, not the best news, but we are leaning positive. A lot of money going into tech stocks, my apologies, and a lot of money coming out of U.S. Treasury into the economy. This leads on to our risk on market sentiment. This means expectations are higher for further economic growth. Meaning for our currency traders, we can expect the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound to appreciate should this risk on market sentiment continue, as well as indices globally can be expected to continue appreciating as well. So looking at gold, this was a trade that we've been lining up for a very long time. We accurately predicted this corrective wave. We accurately predicted this next impulse wave that we're in now. And my bias is going to maintain bullish on gold. I still think we're going much higher. And I just think that this was a temporary pullback, which we did manage to call out very well, actually. Moving into NZDCHF, this is a pair that we've been talking about a lot in the last couple of weeks. Led to a lot of really great trades, and we're in a huge impulse wave right now. We've not had a bearish day since the 23rd of August, so over a week of just straight bullish days, which is great to see. And I do think that this bullish momentum is going to continue, but obviously all healthy trends have pullbacks. So what I'm expecting is a move somewhat like this and then a continuation of the upside. But overall, my bias is going to maintain bullish on NZDCHF. Looking at USDJPY on the 4-hour chart, you can see that in the next 4 seconds, we're actually going to have a successful break-in close below this symmetrical triangle. The symmetrical triangle is at an apex point and a critical zone for us to look at for our next continuation of the downside. So the candle just closed. This is Friday, and my bias is going to be bearish on USDJPY, trying to see a follow-through and a completion of this C wave in our overall corrective pattern. AUDUSD is a daily chart pattern which I've been eyeing up for quite a bit of time, and it is a 5-wave move to the downside. We finished wave 3 recently, and we recently also finished wave 4. We know this because we were anticipating a retracement, and as you can see, we've already successfully tested the 50-level Fibonacci retracement level. So now I'm expecting price to maybe consolidate around this area, find another price pattern to then act off of, and then at which point we will see prices continue to move lower. But my bias is going to be bullish on AUDUSD. So here is EURUSD, and I have the same bias as AUDUSD that I do on EURUSD. As you can see right now, we have a double top off of an order block. Shout out to Rayvon, Technical Gods Forex. And as you can see here, we are extremely overbought as well as have some strong divergence on the RSI. My bias is going to be short off of a reversal on this top. NZDJPY is another pair I am currently eyeing up for a bullish move to the upside. What we're looking for here is just a continuation of this 5th wave. We're in wave 1 right now, and we're going to see something very similar to NZDCHF. A move like this, and a continuation of the upside before having another retracement and then another move to complete our 5-wave advance to the upside in wave 5. I really apologize if you guys can hear that. Right now, we're going to be looking at oil. Oil is my chart of the week, and as you can see, we've been bouncing religiously off of this resistance line in oil. So what we're looking for now is another potential touch to this line, and at which level I will expect a rejection and a continuation of the downside, or if we break it, which would be great, we would see a break above, a retest, confirmation of that level, and then a push off to the upside. So this is an area which I'm looking for to see exactly what happens, but either way, this will yield a profitable trade for us if we keep a close eye. Hello traders, I really hope you guys enjoyed this video and take some valuable insight out of it. Happy Labor Day to all of our American viewers and anybody celebrating. And if you're already not subscribed to all of our social media platforms, be sure to do so, because we're releasing new content just like this across all of our different platforms every single day, and videos just like this and better on our YouTube channel. So be sure to subscribe there as well.